there's this question out there comparing Nvidia to a Cisco. You've been in the game long enough. Talk to me about your take on that comparison.
Yeah, so I grew up in the dot-com era. I think I was about 10 years into my career, and there are definitely parallels, right? Cisco was the driver and the builder of the infrastructure for the internet age. And there was overinvestment in this space, and NVIDIA is clearly one of the biggest builders for infrastructure of this generative AI days. And we do need to be very careful and look for what I call the precursors of something that could pull back. Now, first off, I don't see anything changing for 6 to 9 months, but we do need to look at the downstream profitability that people in the ecosystem are making or not making. These are the software companies like Adobe, Salesforce, SAP, and ServiceNow, because if those enterprises and those consumers aren't paying more for those new AI features, then this whole gravy train comes to a screeching halt, like we saw in the internet bust.
And so all these things considered, what is NVIDIA going to need to continue to prove on a sequential basis at this juncture that's going to be critical to cement this broader story that they've been able to sell the markets on?
Yeah, so growth, it's growth, and more growth. And this next generation of NVIDIA growth, the new growth, will be all about the enterprise. 80% of data for companies and businesses is still on site or on the enterprise edge. So what they're doing is they're enabling companies like HPE, Dell Technologies, and Pure Storage and Lenovo to build that out. And this week, I actually personally attended the HPE and the Pure Storage event. This is what it was all about. This is the second layer of this data center build out.
It's impossible to ignore the effect that AI has had on the entire technology landscape over the past year or so, and NVIDIA has been the standard bearer. The company's cutting-edge chips are at the heart of the AI revolution, providing the computational horsepower that makes it all possible. As a result, Nvidia stock is up more than 200% year to date, and these gains led to the company's recent 10-for-1 stock split. They also led to many Wall Street analysts reevaluating Nvidia's future prospects. And there's a new bullish price target from one analyst that investors should pay close attention to. In fact, Rosenblatt Securities analyst Hans Mosesmann reiterated his buy rating on Nvidia stock recently and increased his price target to $200 for the next 12 months. That represents potential upside for investors of 58% from where the stock is currently trading. In today's video, we're going to talk about why the analyst made this call, as well as why NVIDIA stock is a buy before June 26, or the company's annual shareholder meeting. But before we do that, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Well, and it's interesting, in your notes to us, you explained that this is a private cloud play. How bullish of a signal is that for the chip sector in general, but specifically here for NVIDIA?
Well, it's very positive. First of all, there's a little bit of a diversification of risk, because if the only enterprise AI plays are in the public clouds, then it's pretty much winner take all. And I view this enterprise play as there's something really here. And then what you do is you have the VMwares that's owned by Broadcom, the Red Hats of the world, IBM software, and even software from HPE that will get a lift and a juice from this infrastructure build out. And here's the thing, that the enterprise data center play is more durable than, let's say, the public cloud play. It's kind of the gift that keeps on giving. So if NVIDIA and its partners can stick this landing and enterprises can start either leveraging the benefits from enterprise SaaS companies like I talked about, or building their own, then this is going to be a 5 to 10 year run. And maybe we won't see the dot-com bust like we saw decades ago.
If Nvidia stock reaches Hans Mosesmann's $200 price target, its market cap would be within striking distance of $5 trillion, and he thinks that Nvidia can achieve that thanks to one overlooked aspect of its business. According to the analyst, the real narrative lies in the software that complements all the hardware goodness. He also went on to suggest that demand for software will increase over the course of the next decade in terms of overall sales mix. We think that the analyst hit the nail on the head here, as Nvidia's competitive edge lies not only in the hardware, but also in the associated software that helps provide top performance. And there's a huge market for this. In fact, Kathy Wood of ARK Invest estimates that the total addressable market for AI software could be worth $13 trillion by 2030. Not only that, but Nvidia will begin shipping its next-generation Blackwell GPUs later this year, which will cement the company's lead in the AI chip space. Nvidia stock is currently trading for 51 times forward earnings, and while some might consider this expensive, it's still an attractive price for a stock that has generated gains of more than 20,000% over the past 10 years. For this alone, we can say that Nvidia stock is still a buy, and this recent pullback is the perfect opportunity to buy more shares. But with Nvidia's annual shareholder meeting approaching, we have to talk about what it means for investors and why the stock is a buy before the event. So let's get right into it. Hello everyone, and welcome back to Investocracy.
You mentioned all the players in the space, Patrick, and it makes me think about the competition of it all. I'm curious if you can talk about the biggest risk to Nvidia when it comes to pricing power on its chips, and just give us some context on, the pricing of Nvidia's chips versus some of their competitors.
Yeah, some of the earlier data center chips that NVIDIA had, they might sell for $5,000, $10,000 a piece, but now we're looking at $30,000 to $40,000 per chip, and that is astronomical. It's probably over 1,000% gross margin. But the longevity here, so you've got two levels of competition. First, you have the merchant silicon providers, the AMDs and the Intels of the world. And then you have the homegrown ones from AWS, from Azure, and from Google. And what it is a race right now is NVIDIA is trying to get a lock-in through their software. I do believe that chip makers and AMD in particular have come up and have as competitive or almost as competitive chips for training. 100% there are competitive chips for inference, but it's that software lock-in that's referred to as CUDA or NVIDIA NIMs that NVIDIA is trying to stick. So regardless of who has the better chip, you have to go with NVIDIA because of its software.
On June 26th, Nvidia will hold its annual shareholder meeting to discuss strategy and vote on action items like board approvals. In general, annual shareholder meetings don't move the needle as much as earnings do, but Nvidia's upcoming one is still an important event that could help shed some light on what the future holds for the company and the AI market as a whole. There are many reasons why the stock still looks strong as we approach the meeting, and one of them is the fact that Nvidia's cash flow is extremely healthy. Many analysts are telling investors to keep in mind that competitors like AMD or Intel could catch up and take market share from Nvidia, but the company has the major resources needed to protect itself through constant innovation. In tech, having the best product goes a long way. So Nvidia's competitors need to produce a product comparable to Nvidia's if they want to chip away at its market share, and in order to do this, they need a lot of money. For instance, AMD spent $1.5 billion on research and development last quarter, while Nvidia spent $2.7 billion. Keep in mind that Nvidia is already in top position, as it has the best tech on the market, and it's still outspending AMD almost 2 to 1. Intel, on the other hand, is outspending both at $4.4 billion last quarter. The catch here is that this spending is putting Intel in the red, and it's very likely that it'll be unable to keep this up, reporting negative free cash flow. So now that we know that Nvidia has more than enough resources to defend itself from its main competitors, we can say that Nvidia can maintain or even grow its already massive market share. There are certainly more factors, but it's not an unreasonable assumption. According to data from Statista, the global AI market could grow at a compound annual growth rate of about 28.5% through 2030, and this is a seriously quick rate of growth. slower than the lightning speed at which the company has been growing recently. But still, this would be an incredible growth rate to maintain. And we also should remember that this is an estimate for the entire market, not just semiconductors, which are Nvidia's main business, so this is a very rough measuring stick. The semiconductor segment could have a lower growth rate than this, but this brings us to our next point, which we're going to get into right now. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Eventually, every dinner table is going to know about Compute Unified Device, whatever the A stands for, but
Right.
applications, something like that. But anyway, at the end of the day, and I'll look that up and give that back to our viewers here.
Yeah.
Architecture, that's what it is. But anyway, all these things considered, Patrick, it's been one of the most overcrowded, or de facto, as Goldman Sachs has called it, AI trades here. So as we think about NVIDIA going forward and the 10-year horizon that you were just looking at, I mean, we're right now in the ballpark of a $3 trillion market cap. What do you think it could get up to?
I don't see any reason it couldn't get up to 4 trillion. And again, a lot of this is based on expectations, because you look at PE, it's pretty astronomical, right? And if we can see some positive signs from the downstream players, because other people have to make money, not just Nvidia, again, otherwise this comes to a screeching halt. But I don't see any reason why this couldn't get to 4 trillion if we continue to see those positive signs down in the channel, and we keep seeing positive news coming out from Nvidia with its partners.
Patrick Moorhead, who was the More Insights and Strategy founder, CEO, and chief analyst. Patrick, great to speak with you as always.
Thank you, Brad and Maddie.
Nvidia is becoming way more than a semiconductor company as it's expanding its revenue streams by entering new and growing industries. In fact, Nvidia is attempting to build an entire AI ecosystem. It is partnering with companies like Dell to offer full-scale, on-premises AI computing solutions, and it is building technologies and end-to-end platforms designed for autonomous vehicles, humanoid robotics, and drug research. There's more, but we'll stop here. The point is that Nvidia intends to position itself at the very center of all things AI as a star that other companies orbit, rather than just one more link in the chain. So, Nvidia stock is still a strong buy for long-term investors, especially at this current dip, which can be considered a great opportunity that investors should consider capitalizing on before the stock skyrockets again. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.